Welcome back. Welcome back. We have 8 viewers waiting. Kurt, Connor, Babo's Kingdom. Welcome, welcome. Gonna send a message to everyone that the stream is starting. How's everyone doing tonight? Yo, Bougie. Welcome, welcome. Morning, Steve. It's good, we've got a bit of a community going, right? Like, you know, some recurring people. Basically the same crowd every single day. I think the people I've seen, like, from the very beginning or the first couple of days, first week, are still here today, which is quite good. Hey, Jack. Hey, G Campbell. Yeah, no worries, man. I mean, that's why I'm recording them, right? Like the live streams, and you can watch them back later on. It's just you can't ask questions during the streams, which is a little bit unfortunate, but that's kind of also why I'm doing the kind of like the paid version, which will come eventually, and that'll come with like a Zoom link, Zoom access, so that everybody who comes on gets like question time, right? You guys can ask questions live, and I can break down your question. And if you don't understand it because you're asking in person, right? If you're asking it and you don't understand, you can go back and be like, oh, okay, could you explain this part of it, or does this make sense? And honestly, like, one challenge I would have is try to ask me a question where even I'm like, oh, I don't know, right? Because that will challenge my learning. And then when you can ask me a question that's like that, it will mean that you are improving. You're getting to a stage where some of the questions you're asking we haven't potentially thought of yet. So that's good. Like, that's how we're building on top of each other, right? It's a whole community. Evening, Jack. Evening, Jack. Yeah, we're gonna just start in 2 minutes. Just waiting for a couple people to join up. We should be good. Yeah, I'm just gonna. This is gold currently. We'll see what's going on. We have 1 day left of the week, right? This is the last stream for this week. Obviously, there's no stream on Friday night because there's no Saturday Asian. There's no Saturday New York. Especially just for gold, right? I guess if you're trading crypto, you might have something to look at, but that's not what I'm breaking down. So just gold for now. We might move towards different pairs, but honestly, I don't see a need for it. Like, if you can make money off one pair consistently, there's no reason to jump across many pairs. It's just gonna, like, each pair trades slightly differently, right? So it's just annoying to trade potentially. Cool. I am going to get started. Right, we have 11 people here today. I appreciate I changed the time, right? It's like half an hour earlier, but this gives us, some more time before Wix's stream. So in the future, we might do like a half an hour stream breakdown for free, and then the 1 hour or like 45 minutes after that is just questions, depending on how many people we have. But cool, let's get started. First thing I do, get into gold, clear everything, remove all drawings, right? And then monthly candles. Don't care about anything else. That's how I start my analysis. Cool. Monthly is in a very similar place to where we were yesterday, right? We've come down to fill this range down to here, this minor range here, right? So at any given point, right, price can make that decision towards, where it wants to go, if it wants to continue driving down, or if it wants to reject to start going up. So there's only 3 scenarios, right? Either price goes down, or price reverses, or it ranges, right? There's only 3 scenarios that can really happen. If it ranges, cool, we'll get, because this is the monthly candle, right? We'll get buys and sells within this range. If it starts going up, cool, we'll look for bottom wicks to retest those highs. If it goes down, cool, we'll look for those top wicks to come down. That's it, right? That's essentially what we're looking for in price. So now that price has tapped this range, right? Because the monthly is closing in such a long time, it has so much time to do whatever it wants, right? So it's difficult to look at the monthly. We only know that every time you had a closure, like this was the previous monthly closure, right? Every time you had a closure below here, where did you drive down towards, right? You drove towards these sorts of areas. This one drove slightly further. You tapped around these sorts of areas. This one tapped even further down at these sorts of. So I would say, like, if price really wanted to continue driving, it could start driving towards around these sorts of areas, right? Knowing that every time you respected, you came down. You respected, came down. You know, you drove past. You know, you started coming down all the way after grabbing liquidity towards these sorts of highs here. So this is the kind of ranges we're looking to fill. You filled one range, which means that you could, you know, reject a little bit, grab liquidity, but we're still very bearish, right? Let's drop down to the weekly, because monthly is just kind of like an overview of what price wants to do. I would say on the weekly we have a support approximately here. Is it slightly lower? Is it slightly higher? Who knows? I'm going to put it here. What does it look like on this side? Yeah, it's fine. So I have it here based off of firstly this. I understand that this could be a fake out to go up, right? But on a lower time frame, because I'm also seeing like a bunch of these, right? So this could be quite a strong support. So at any given point, price will come down to fill 1804, right? And once it does that, it can do what this did, potentially grab liquidity, grab liquidity, start flipping bullish, right? Because the weekly is actually going to close in a day, if it closes similar to this kind of area for these, right, we'll be looking for that weekly bottom wick to start driving price up to create the weekly top wick that it doesn't have, right? And this would also be the monthly top wick. When was the last time you saw a monthly candle with no top wick, right? Like this was the last time it drove, right? And it started driving down all the way. So if you're continuing bearish, right, unless it drives down all the way to here, I would expect price to grab liquidity on the higher time frame. So this monthly is very likely to have a top wick. All right, cool. So I know we also have news tomorrow, so that is potentially a catalyst to drive price up or down. We don't know, we don't trade news, so we just only react to news, right? So just looking at the weekly, the most important thing, because obviously we're not trading the weekly, the most important thing is that we have no top wick and we haven't filled the full range yet, I would say, right? We're just looking at every time price closed below. Let's say price closed below here, right? Let's say this was your support. Every time price closed, you fill this range, Just going to highlight it so I think people can see this slightly clearer. You filled even down to here. These ones you kind of filled down to these sorts of areas, right? So regardless of whatever happens, it will fill down to 1804 eventually. Whether that be this week or next week, it will. And then once it does that, it will come back to the top of the range. It will either range or it will start breaking or whatever, right? So just keep that in mind. So we're still looking for sells. We're very interested in sells. Let's look at what the daily looks like. Actually, I'm going to keep that because we're interested in these sorts of areas, right? So I'm going to keep this. This level's pretty good, 1804 for the daily as well. It's a pretty nice support actually. Yeah, I'm going to keep this. I am also seeing a separate level that's slightly higher though. Hey Tony, welcome. I'm liking this potential level, but it's okay. We'll keep it at this point for now. We'll have more kind of levels closer to where price is on the 4 hour and the 1 hour, right? But in general, right, the daily closed bearish, or this is the daily candle, and we're looking to close bearish, right? But it's not a very strong bearish candle. We're kind of respecting, I would say, this potential high here, and we'll see this on the 4 hour time frame. Actually, let's go down to the 4 now and see what it's respecting. Right, so the 4 actually at some point closed here, right? Respected, and it's going up, right? So what is this level on the 4? Just get rid of this box real quick. So could be a level potentially around here, or maybe we can say it's slightly lower towards these sorts of areas, right? So if that's what price is respecting, cool. What are we looking for? We're looking for price to break grab liquidity, and then coming down, right? So that's generally what we're looking for on the 4 hour. And let's look at when that happened last time. So cool. Last time price did that, drove, right? It just closed below, grab liquidity at the top of this range before you filled the range, right? And you potentially have a smaller range in between, towards around these sorts of areas, right? So that's another range. So you came down to fill the range, came back up, grabbed liquidity, you started to close below, you faked out, went back up to grab even more liquidity, towards 18, 19 sorts of areas, and then you filled the range down to 1804, right? So that's something that we're looking for as well, right? But it's just that first step is that closure below 1814, which hasn't happened yet, right? Closer to where price is now, let's have a look. So what is this? Because we have a support at 1820. 1820 looks pretty clean here. Looks pretty clean here. Let's zoom in on the 1 hour to see where the support actually is, right? Just get rid of this. Cool. So I would say respecting these sorts of areas, right? 1820.776. And that, what does this look like here? Cool. You have exactly that level there. Pretty happy with this level, I'm not gonna lie. You have some top wicks around these sorts of areas. Yeah, I'm very happy with this level. Just look a little bit further. This is very messy, but you still had some level of respecting, right? So it's a pretty nice level. You also close celery going up, nice. It's very much confirmed level. So at the moment you're in this range. You're in a range between 1820 and 1814. What does 1814 look like on the 1 hour in terms of here? Where is that range, right? Let's identify that as well. So I'm actually liking this. This is not bad. Move this slightly higher up, accounting for these two wicks here, right? This wick and this wick, but also accounting for this. This wasn't like a fake out, but this was a fake out, right? Came back into range, didn't fill, but you filled going up, right, to grab that liquidity. Cool. So if we're in between this range and this range, and we haven't broken out yet, you can expect us to range, right? And then eventually it will either break up or break below, right? Looking at overall kind of price action, right? You've created a lower low, right? Your lower low, if you're going to create a higher high, then I have no idea where price wants to go. But if you create a lower low, create a lower high, and then you start creating lower lows again, then cool, right? Then we're just looking for this, right? And then once this happens, we don't know where this will be, but we'll look for potential first entries somewhere here, or potentially somewhere around here. And then if the price does push up all the way in terms of like a strong wick, we could get pineapples, right? But that's just us understanding that it's broken, shown us that direction, and then gone up to grab liquidity. How I look for it is like a closure below, firstly, but also price breaking this bottom wick in terms of 1812.967. If it doesn't break that wick, right, at some point price, if you look at the 1 minute, at some point price came down all the way to here. There was a 1 minute candle that was here. If price doesn't close below here on the 1 minute, then that means it could potentially still be respecting a specific area. So that's why wicks are important, right? If the wicks break where the bottom wick is here, that means we've confirmed that, okay, we're creating lower lows. Yeah. So that's how I'm like kind of starting to use that 1 minute into my analysis as well. So let's actually look for where we could get potential sells, right? But the sells would be, I would need a breakout below. So once we break below 1814, where did we grab liquidity before coming down? Cool. Close below, all right? But we already filled the range. So this is a difficult one to look at, right? Because you could say, you know, you grab liquidity towards 1815, but is that really liquidity, right? And once you close below, is this enough liquidity for us to drive down? Because you've already filled the range, right? So technically you're just kind of ranging. So let's try to find a better example of what happened. So last time price kind of just did like a strong bearish move. We had this area. This area is less interesting now, I would say. So we had this. What was the last time we ranged in between here? That's what I'm looking for, right? So let's just go back on the 1 hour. Ranging between 20 and 14. We just said this is not as clean, so I'm gonna go over to here. 20 and 14. Did we range in these sorts of areas? Kind of, yeah. So I'm looking at this, right? So you had a break below. You already filled the range, but you also grabbed liquidity towards these sorts of areas before coming further down. Right? Further down means like all the way down to these sorts of areas. In this case, right? You grab some liquidity here. Let's see what else we can. I am out of candles. This is less interesting for me. Okay, cool. I think it's going to be... So because we don't have as much data that I'd like to see, I'm just going to have to do this based off of market structure. Alright, and market structure for me would just be, we're ranging here, get a break, right? I'm looking at potential entries in this area, like probably the top half of this, right? Understanding that it could also break up, right? So I don't want to be in a sell immediately, right, to start coming down. Ideally, I'd look for something like this, and where this level will be at is difficult to say with news, right? If news comes out positive, negative, which means the price of gold is going to start driving up, it might be difficult to take those initial entries slightly lower down because price could just start pushing up, right? So let's look at lower time frames actually, because we also have ranges we can play within here. Actually, the 15 I know looks relatively good. So yeah, so you have a range here. All right, and then you also have this kind of here as well. I am relatively interested in these, so cool. I'm actually going to say this could be a fake out on the 15. I do like this though. Okay, yeah, I'm going to move it just a little bit down. Yeah, okay, cool. So this is the 15 chart, right? We've broken up, right? We're trickling up. So if you look on the 5, we're going up really slowly, right? We've kind of created some structure, but you're not like pushing up or down or whatever, right? Because there's no volume in the market at the moment. It's trickling up. So if we do get a breakout, and I would say a breakout is probably, see where on the 15 actually. I've mainly been using the 15 chart to see where we can get confirmed breakouts or whatever. But if we get a breakout above 1820, potentially 18, where's the next range up? Looking at potentially this area. Yeah, I'm gonna have something here. Cool. If we get a breakout above 20, 21.7, right? Let's say we do this. We get a breakout. If there's no top wick, similar to this, right, I'll take a sell in kind of these areas, 1823, these sorts of areas, I'll look for sells. Understanding that if it's breaking out, that there's volume to drive up, but there's no liquidity, so it's likely to retest these sorts of areas before driving back up. So that's what I'll be looking for in terms of buys if we start breaking up below, up above here, right? Because look at this. This was, if this was enough liquidity, it would have grabbed below here. Right, you didn't break the lows, you closed respecting, right, and you came up, you had this low liquidity grab, but you didn't really go anywhere, and currently there's no volume, so you haven't really pushed anywhere. But if you were to get sells potentially, I would be looking for something. Let's draw this out. So I'm just looking at if there's anywhere we can mirror, so it's easier for you guys to look at. We're also initially for New York we were looking to mirror this, right? It kind of happened initially here, but then we broke down, and then we started closing in these sorts of areas. So it's not as valid anymore. We were ranging in this area, but then we grabbed liquidity towards here, drive up, right? So every single time, look at this, right? Every single time you wanted to go up, let's actually go on the 5. Yeah, every time you wanted to go up, you know, cool, you're rejecting here, you're rejecting here, you broke the lows, grabbed liquidity, and then you started being able to go up, right? And that's exactly what we're looking for here as well. If this grabs up to here, right, there's no liquidity here that's being grabbed. So if it continues to trickle up and then you get a closure above, right, we'll look for that bottom wick to drive up. Sells are slightly more difficult, I would say, mainly because we don't know where they can happen. If you start getting closures below here, you might be able to get into some sells. But even if you get like a closure below here, it's difficult because what's to say that's not liquidity to drive up, right? So I would say sells, I would need a closure below 1814 first, and then I'll be looking for potential entries and around these sorts of areas. So I would need, ideally, so I think this is the order of things that's going to happen. It's going to trickle up, going to get potentially a fake out. All right, if you get a fake out, I'll take a sell because there's no liquidity. So I'll take the sell to grab liquidity. I'll exit around these sorts of areas, and then if the price wants to go up, cool, right? Then I don't know what's going to happen. It can go up, but if not, if price fakes out, comes down, right, and then we're starting to break these lows, right, and we break the low, I'll be looking for liquidity again to drive down. Understanding that this is a liquidity grab for this push here, and then this liquidity grab is enough for us to potentially push down to 1804. Does that make sense? So I'm looking for potentially price to have 2 liquidity grabs. One to push us down to these sorts of areas, and another for us to push us past those areas, because without those, it's difficult for price to move out of ranges. If we don't get those liquidity grabs, we'll just continue to range, right? Like for example, with this, right? We just ranged here on the 5, right? We're ranging pretty hard here on the 5, right? And then you grab liquidity. You know, you faked out once, you faked out twice, and then you were able to drive up. If I look like here, right? In all of these wicks here, right? If you look on like the 5, like this is just massive range, right? And then you grab liquidity to go up before coming down, right? And then you also didn't have enough liquidity to continue down, so you went up again slowly towards these sorts of areas to grab liquidity to come down, right? And then we thought this breakout here was going to be, oh cool, we're going to come down, but again there wasn't enough liquidity, so it didn't break out of range. You need liquidity to break out of ranges, right? So at this point it just went back all the way back up to here, and now we're back into this range. So we still need liquidity to come down, and that's in line with what we're looking for in the daily and the weekly, right? So weekly, still no top wick, right? Obviously we're very far away, we're like a couple hundred pips away, but that's what price needs to start doing, right? Where does price need to tap before potentially having that strong reversal? I don't know, like 1804 sorts of areas. If it's not 1804, then the range below is going to be towards like these sorts of areas, right? Yeah, like I'm looking at potentially like these sorts of areas to get tapped if price needs that liquidity to start driving up and reversing. But by the time we get to here, we will have so much market structure that we can see what's going on for sells. Yeah, so if we do get these closures below like 14, you could look for first positions like at around 1817, 1818 sort of areas. It's difficult though, because you still need to keep in mind that that filled the entire range first, right? So you see this, right? This filled all the way, this wick filled all the way down to here, 1810, right? Not down to 1808 obviously, but filled all the way down to 1810. But it closed bullish, right? Closed bullish, respecting 1821, and then it kind of faked out to come back down, but regardless it closed bullish. So at any given point this could have just reversed and started continuing going up, because this was enough liquidity. right? But it's just price was continuing bearish, and the kind of market structure was a continual bearish trend. So we continued coming down. We grabbed liquidity once. This is one liquidity grab. This is a second liquidity grab, right? And this is a third liquidity grab to come down to here. Yeah, so this is why I'm asking price. This is why I'm looking for price to grab liquidity around these sorts of areas, come down to here, and then break below, grab liquidity to come down. Does that make sense to everyone? It's difficult to put a buy and sell area, I would say, currently. But I'm actually gonna, let's give it a go. Let's give it a go. There's not much in mirroring, I would say, is the issue. I'm gonna delete this. Let's have a look. Yeah, like days like this, it's not that I need more structure. There's a lot of structure that's there, but because price has kind of like been ranging so hard, and like the range is a pretty big range, right? Like technically your range is from here to here. That's like 150 pips. So if you wanted to drive away from this range, it definitely can, right? Like it's just we don't know where it wants to go. Yeah, Night Santosh. So let's have a look. So I mean, taking a buy at 1808 isn't bad, or potentially like a first entry towards around 1809. And I'm looking mainly at like at this, right? These wicks here, this wick here. You could be looking for buys at around these sorts of areas. Yeah. Oops. Yeah, I mean, let's zoom down slightly so we can get like a very exact entry for you guys. 1809 sorts of areas. This is pretty exact, man. Okay, cool. I'll put a buy here. In terms of sells, it's difficult, right? We mentioned that price has already tapped 1832, which is our kind of areas around here. Alright, price has already tapped these sorts of areas, right? With this. But it didn't drive. So it didn't drive, but there's no, like, if we come back to tap 1832 again, it could just be the start of a reversal, right? It could just be this coming up. Like, we don't know. That's why I can't take sells at 1831, 1832, right? But if we come down all the way to 1809, I'm understanding that it needs short-term liquidity to come further down, or if it's like the beginning of a kind of reversal, we'll see that over time. But the buys here, I wouldn't be targeting anything crazy, honestly. Like I would probably be only targeting like maximum the top of this range. It's not going to be like a runner or anything. 46 pips is not bad, right? But it's difficult to get any, like, sure, you can get a buy here and then you can get like another buy around here. What does this look like? It's not bad. You could potentially get a buy here as well. Move this slightly lower. No, actually, I think I'm down to here. Now, what does this look like? Why is there a cry emote? It's because gold is breaking down. It's sad. Cool. I'm gonna put it like right at the tip here. This will be my second buy, but again, I would say this first buy has to. If this is news and then it taps into 1809, I'm not taking it, right? If this isn't news, right, or it's like after news and it's like potentially like 10-15 minutes after news, it comes down, taps here before creating these top wicks, right? Like I would need it to kind of do what this candle did, right, here, but I would need this to like fill the entire range, like potentially even like something like this, right? And then I would take a buy here. But if it's like come down halfway and then it's tapped all the way up to here and then it's coming down, then it's difficult, right? And why? Because we're understanding that that could just be, you know, price doing this and coming down slowly, right? So there's no reason for it to come back up unless it wants to grab liquidity but you don't know. You're just gambling in terms of where that rejection is going to be. Whereas if you have a very strong push down, like, you know, you're potentially respecting these sorts of areas, and you have like a strong push, you know, it's likely that you'll get some sort of rejection, and we've seen this a lot of the times, right? You'll get a stronger rejection, and then price will likely come back to fill a second time or a third time, whatever. But that's none of your business anymore, right? You've just taken that first entry into this kind of area for that quick rejection. So cool. I would say buys are around there. What does that look like for our price? Yeah, they're not bad. If price starts breaking below and doing this, trickling down, right, as I was just saying, I'm not taking a buy here. It would have to be slightly lower even for us to come back up. But if price, you know, ideally actually it respects, it's like going up and then it wicks into this, wow, these buys would be incredible. In terms of sells, I'm actually not going to mark up any sells, understanding that it's, yeah, like if price starts breaking below, cool, I'll look for sells, but I don't know where that could be. Price starts breaking below. Last time price broke below, grabbed liquidity here, right? Didn't drive. So does that mean if it taps here again, are we going to need it slightly higher? Are we going to look for these sorts of ranges to get tapped, right? Before we're able to come down. But at that point, price will have done this, right? You've broken below, and then you've like come all the way up to here. So is that just another reversal? Right, and was this a fake out? Does that make sense? Currently there's no direction in price. I would need it to almost drive a little bit before we understand anything. Cool, I'm going to take some questions. Connor, you've got a bit of an off-topic question from the analysis, but I wanted to ask you guys to see if there's some confident. Okay, it's the fundamental of a wick entry to enter position without the candle confirmation back into the range being placed because of the recognition of a fake out or liquidity grab. I would say kind of. So wick entry essentially is us understanding that price is either in a range and it's respecting that range, right? And then it wants to move in a certain direction, and then it grabs liquidity in another direction. So if I draw this out, let's draw like three, like this, right? So let's say price does this, and it does this, right? We're understanding that it's bearish, right? If we get a break of these lows, we'll be looking for sells to come down, right? But we also understand that there's no liquidity here. If not, it wouldn't range, right, continuously. You're likely going to get some sort of fake out here that'll come back in the range. When you come back into range, you'll fill the range, right? So when you fill the range, we could be looking for liquidity at these sorts of areas to come down, following that bearish trend, right? But a lot of the times you won't get that, you'll just get this. In that case, it's just one less confirmation, but you can still take these sells because this is a very likely fake out. Suddenly taking a buy here while you're so bearish is very difficult. And this, like, more times than you will imagine, is actually a fake out to come down. And this is the liquidity we're talking about, right? So essentially we're taking this wick entry because it's a much better position than the breakouts here. Because a breakout here could be what I just showed, right? So it could be doing this, and you kind of going up, and then you could actually fake out here to go back up, right? So this could just be the reversal. So taking an entry here is slightly higher risk, whereas if you take an entry here, at least price will come down to grab liquidity towards these sorts of areas before you're able to drive up, right? So we're understanding that this entry gives us a lot more advantage. We can exit here, or we can exit at break even, right? A lot easier. Whereas this entry, if we start going in drawdown, there's a high chance that we won't come back to our price point to exit in break even. Does that make sense, Connor? How do you identify fake outs or liquidity grabs? Okay, so similar to this, right? If we're in a very bearish structure, very bearish market, right? Typically, we look for these fake outs, we look for this liquidity because we understand that price will continue to go in that direction, right? This is just market structure. It will continue to lower lows and lower highs, right? But we also understand to break through ranges, we need volume, right? And volume comes in the form of fake outs and liquidity, because those are kind of the same thing. So we're understanding that, okay, so it's not like our understanding that price needs to do this. It's just that it's like this is something we've seen so often that like it happens every single day on every single time frame. Like it ranges, it breaks, and then it starts ranging again, but then it doesn't break, right? And then it's just struggling to break. Why? Because it doesn't have enough momentum to continue in that direction. So what we're looking for is price grabbing that momentum, right? It needs to grab some momentum before coming back down, and that is in the form of a fake out, which is why we stopped taking buys in range 1. We're looking at range 2 buys, right? Similar to this, right? So if price, I think this was like last year, right? So if you're ranging here and then you're ranging here, you wouldn't take the buys here, right? You'd confirm, oh, we're actually going to go up. So this is a liquidity grab, but last year we wouldn't have taken this, right? But here, I would say, once you break above this price point, you then confirm that there is a market structure shift, right? Because you're not just going to break the lows and then break the highs for no reason. That requires volume and direction, right? So once you break above here, this is when we would take that range 2 breakout, right? So does that make sense why we take range 2 breakouts instead of range 1? Because we're understanding that range 1 a lot of the times is just a fake out. You know, if it fakes out, then we're fucked, right? We've just entered a buy, like right here. And that is a tiny thing, right? And say our stop loss is below here, then like a lot of the times, price, because it's so bearish, will just get stopped. Yeah. Whereas here, once we're in this buy, if price does want to come back, right, it will be in some drawdown up to this point, but then you'll still have a high chance of continuing to drive it, right? Because that's just the market structure. Like this is now a modification of this structure and a shift to a bullish structure. Does that make sense, Ali? You see Don moving sell levels higher when we are trickling up compared to quick moves. Yeah, that's kind of what I just mentioned, right? So actually I'm going to keep this for now, but like look at this. Price at some point was just trickling, right? It's just like coming down slowly. Does that mean I'm just gonna like it's difficult to trade here, because at any given point, like this is no direction. Like sure, you're coming down slowly, but you're also like, this is a massive range between 20 and potentially like up to here, which is 27. You're just in a range, right? But there's not much volume, so you're not filling the ranges, you're not doing anything. So when price trickles and like kind of slowly goes towards a level, right, we're looking for price to break that level and then start reversing. Why? Because let's actually go back to this. It's easier to explain with these, and I feel like you guys like these charts as well. So let's say price is like ranging like this, right? And then it kind of ranges here, but then it slowly comes up, right? So what does this mean? What does this show? This shows that, okay, cool, we're still in this range, right? We're still in this range, but we're still bearish. So if we were to take a sell here, this is like, it's the same concept where price can continue to do this, and then like if we take a sell here, what's to say that it's not going to continue doing this, or it's going to suddenly grab liquidity? All right, so actually, it's because we're still expecting a liquidity grab, right? So if it does this, we're still expecting liquidity grab up to these sorts of areas before coming down, right? And then this kind of trickle up. If it trickles up to even up to here, then it just means that we'll have to move that like price point slightly higher, because trickling up is just filling of that range, and then we'll be looking for a spike up or a spike down. Like, and it's mainly like it's slightly more difficult to explain actually than I thought. But let me try to find an example. It's probably on the 5 somewhere. This is why we look for like the break of the highs or the break of the lows. Yeah, these are not too clear. Okay, something like this. All right, so price is coming down, right? We're understanding that this is then filling this range. We're filling this range, right? We filled the range, but after that, we still need to grab liquidity. So once it does that, it's going to have a huge spike in the direction of liquidity before reversing. So this is exactly what your question was. And if this was a buy, right? If you're trickling up, it just means that we're just there's no we're going in that direction very slowly, but there's not enough volume for a price to continue pushing in that direction. Because if we do, it's just going to do this, right? It's not going to, instead of trickling, we just do this, right? Instead of this. So this indicates that there is not much bearish volume, or the bearish volume is dying down. Does that kind of make sense? I don't sound as robotic on my stream. I think it's because I actually have to engage with you guys. Whereas when I'm on Don's stream, I literally just don't even read chat. I just don't care. When do you know how to move stop loss to break even? Because a break of the stop loss would mean reversal of the trend. So we move stop loss to break even. Okay, that's another really good question actually. So let's go back to our diagrams. Cool. So let's say we're looking for, alright, you guys choose buys or sells. Which one do you want me to explain? And we're going to be explaining when we move stop loss to break even. Alright, buys, cool. Alright, let's look at this. Let's say price is coming up, right? You've created some structure, and you start to range here, right? And then suddenly you get a liquidity grab. We understand this is a fake out, right? Fake out to come up. Let's say you missed the fake out, and then you have this, right? Let's say this is what price did, and then say previously in these sorts of areas you had price potentially moving up, break of structure, and then this range, fake out, let's say, and then something like that, right? Let's say price did this, and then in between here and here there was just some sort of price action that happened. So these are some confirmed levels, I would say, where you have a salary to go up to fill the range and whatnot, right? And you had a fake out, so stuff like that. So this is just what you would typically see. So let's say you got into a buy around, let's look at the breakout first. So you broke out, right? So you'd be looking for a buy here, targeting, I don't know where you'd be targeting, but your stop loss is probably previous higher low, right? So in this case, you're looking for a buy here, but where are you looking to target, right? Where's your next advantage point, right? Your advantage point is the top of this range, because you're understanding you're breaking into the range, so you're likely to fill the range. So once you fill the range, once you get to this point, it's very likely that at this point we'll be looking for stop loss to break even. Why? Because at this point, right, price could just start reversing and filling the range on the way down. So if it's gone up, it's going to fill the range down likely before making any decision to confirm that this is the range. And this range is confirmed by previous price action in this sort of area, right? So once we hit this area, cool, stop loss is now at break even. And then we'll probably close. This is why we close at these sorts of areas, right? It just so happens that these areas are around like 10, 15 pips a lot of the times, because we're trading the 5 and the 15 and we understand those kind of ranges. But once price is here, we usually close either full or half, and then we let the rest rock if it wants to continue driving. But stop loss is always at break even, because we understand that at any given point price can just start infilling the bottom of the range. Yeah, does that make sense? And then let's now look at liquidity. right? So in terms of liquidity, say you got into a buy here. All right, cool. You have a very good position. Let's say you have a 4-hour stop, and then you have your same target. These sorts of areas, right? Once you're at this point, what are you looking to target? You're looking to target a range fill. It's always a range fill, right? You're expecting potentially a fake out, but you don't know if it's going to fake out. If it is going to fake out, then cool. It's going to fake out, and then it's going to fill this range. So this could be your stop loss to break even. Here, that's right here. If you're expecting this range fill, if you don't know, right, and you're worried that price is going to come down, then your first advantage point is actually here. So then it's up to you where you want to move your stop loss to break even. Sometimes this move here, like if you didn't wait for like a very good setup and you actually got into position here, then you can't have stop loss to break even here because it's very likely to tap and you're just going to be out of the trade, right? But if you have a good enough entry, having it here is fine, right? Having this stop loss to break even here, and if it fakes out, right, then you'll be looking for price to tap here before closing, potentially 50% or your entire your trade, right? So these are just advantage levels. This is what we mean by advantage levels. Like price will fill the range and then make a decision. So once it fills the range, we'll break even, or we've closed a certain amount. Initial stop loss was set to the liquidity grabs bottom wick. No. So what time frame is best for this? Okay, let's look at the potentially the 30, right? So let's have a think. So cool. I'm actually going to use this example here, right? So we were in this range previously. What was it? It's here. Cool. In this range, right? We're understanding that it's going to fake out before going up. Cool. Let's say you got into a buy here, right? You don't know at that point. It's still creating the wick. You don't know where it is, so you can't use the wick, right? Because it's happening. The wick could be like down to here, or like could even break these lows. So what you can use is you can look at like the 4-hour or the 1 hour to see what is the next range. It's always about ranges, right? You always want to put it at below a certain range, or like, and typically the wicks, they fill ranges, right? So in this case, you know, you see this wick here. This wick also kind of was this level, right? And price closed respecting this level. So having it potentially below this wick means that if price does come back and like taps all the way down to here, there's still a high chance it will reject at these sorts of areas because this is another range. Yeah, and we're understanding that if price, let's say, comes down, it will fill the range and then bounce, right? And then at this point you might get the rejection that you want to start going up. This is why we have the stop loss here. Does that make sense, Connor? Like, it's just about ranges and the fact that we typically fill ranges that we enter. If not, we'll fake out and we'll start going back up. And in this case, right, we just faked out immediately on the 5 and then we just started pushing up. Would you take pineapples? Yeah, so for example here in this case, right, I would probably had my first position here at the top of this range, right? It's all about ranges because it's going to fill the ranges. Even if it's like kind of, you know, wicking down to grab liquidity, it will likely fill ranges. And then I'll potentially have another position here, right? Why? Because this is the end of this range. You see these 3 wicks here, it's likely to reject at some sort of area around here. So get into a second buy here if it ever comes down, right? And if it does, then you have an even better advantage point, right? Because then your break even is around here. So if price is closing below these sorts of areas, you're expecting price to come down, like if it's closing against you, right? So let's say price comes down to here, it's going to grab liquidity here before going down. And this area might even be here. Yeah, it's like you're grabbing liquidity here because it's just top of your range. You fill ranges. Yeah, so I think the playbook and like the previous candle wick stuff it's quite old. I would say thinking you have to look at what we trade now and adapt to that. Like the playbook is I wouldn't say it's outdated or anything, but we have evolved beyond that. So taking like a very precise stop loss is difficult now, because it's all about ranges, wick fills, and liquidity grabs, and then and all of that now. So yeah, I hope this makes sense though. Any other questions? If not, I am happy to end it here. Yeah, Connor, does that make sense? We peaked at 32 viewers today. Jesus. By the way, for anybody who was here who wasn't here yesterday, we talked about potentially moving this towards a paid version. So we have first 30 minutes is just the stream breakdown, and then the next hour, 45 minutes to an hour, is for you guys to join, for the members to join a Zoom call where you can physically start learning. I think I'll probably also open up some time for 1-to-1 or 1-to-2 sessions where it's you pair up with somebody and you learn with them, you grow with them. So they will keep you accountable, they'll keep you, making sure that you don't overtrade, over leverage and all that stuff, right? And essentially that stuff, I'll try to start individually teaching more of what I know. So my kind of background is I started trading 5 months ago, right? And with this funded account that I'm currently testing, because I think that I've understood all the concepts, and I can actually start being profitable, right? So with all of that, I'm testing on 100k at the moment, and technically I haven't passed phase 1 or phase 2, but if you're just talking about the amount of money, the theoretical money that's within phase 1, I have already made back everything I've lost. And that for me is quite a large milestone, right? It's understanding that profitability is, firstly, it's skill, and secondly, and secondary, right? It comes second, right? The money is not the main point. So now that I have the skill, right, I can trade the 100k continuously, and once I'm fully profitable, and I can prove that over months and months and months, right? Then it's just cool. Then I don't have to worry about anything else, and I just trade my style and I evolve that over time. That's where I want to get the people and the members too, and that only comes with interaction, only comes with asking questions, coming to the live streams, coming to the kind of breakdowns, and then asking questions in the in-person, well, not the in-person, but the Zoom call, right? And then interacting, and also I'll pair you guys up so that you guys will interact with each other, because you will grow together. If you're growing by yourself, a lot of the times you'll have questions, things that you don't understand, but you don't have anybody to ask, and you can't ask me everything, right? I'm not available 24/7. But if you both don't understand it, then it's a high chance that that's a question for me to answer, right? Or potentially if you both are kind of confused on a certain thing, then I can come in, I can step in and help you guys out. So that's something I'll be looking to do as well, offer those kind of 1-to-2 sessions. But all the members that come into my group, I will be pairing you guys up with another person, and that's just a learning thing. That's a education point that has been proven and is quite useful. But yeah, that's the idea. So with that, I am going to end the stream. Thank you very much to everybody who has joined. What do you guys do DVS? Supply and demand. So I know Kieran does a lot of supply and demand, so it might be worth talking to him. But yeah, cool. I will see you guys tomorrow. On Sunday night. Potentially Monday. I still don't know if I'll stream Sundays yet. I might change that to a members only thing again, similar to Wix. But this is where I plug Asian session, right? Wix is streaming at 8 p.m. Eastern. Right, so be there. Yeah, understand that, now that you've seen all the analysis, see it actually in person and live and taking trades in Wix's streams, right? He will have slightly different concepts to me, but a lot of the times they will be very similar, right? He's looking for similar setups, similar things, and exploiting the market in similar ways. Yeah, so this is perfect where you have the analysis, you're learning, asking questions, and then you see it in action. So definitely join up Wix's stream, and if not, I will see you guys in New York. So yeah, hey, cheers for following. Yeah, I mean, oh yeah, guys, like if you have any questions, message the EvolutionDVS Instagram. Don't message me. I mainly check there for questions related to this. So give that a follow. Send that to your parents, send that to your friends or wherever. But like, yeah, just follow that account and I'll answer all of your questions there. So yeah, cool. And if you have any questions that I can't answer, like kind of over text, bring them to the next session, and then I'll if you paste it in the chat, I'll read it. Right, I've read every single question today, and I will break those down. If you have trades you want me to break down, send them to me. Right, just remind me that okay, cool. Look at this during the stream, and I'll look at it. Yeah, cool. Yeah, I'll put that Insta link in the description. But yeah, sounds good. Cheers, everyone. I'm gonna end it here. Have a good Asian session. Stay safe. Have a stop loss. Right. Listen to Wix. Listen to his breakdown. And I'll see you guys in New York.